The Central Bank of Kenya yesterday issued new guidelines in a bid to curb money laundering and rein in on terrorism financing. The rules require depositors seeking to withdraw more than 1 million shillings to justify why they are withdrawing large sums from the bank instead of using electronic bank transfer. The move is expected to regulate flow of funds, with the government keen to weed out corruption. Adelaide Changole spoke to the Chief Executive Officer of the Kenya Bankers Association on the move and what it means for the banking fraternity and Kenya's banking in the Financial Action Task Force.
The Central Bank of Kenya has unveiled new guidelines for banks that it says is supposed to help sort out the issues of money laundering and terrorism financing. And to just put this into context, we're joined by Habil Olaka, the CEO of the Kenya Bank Association, to put this into context. So, Habil, please tell us, these rules, what exactly do they entail?
Now, these were regulations that were released by the Central Bank. It's not actually something new. I think the impression created is that this is something new that has come out of the Central Bank. I think what Central Bank is trying to do is to create some clarity. The law is already there in terms of the Process of Crime and Anti-Money Laundering Act, which governs institutions in terms of the regime of money laundering and the prevention of terrorism financing. Now, the new regulations that have been given by Central Bank are more or less a clarification and trying to make it clear in the sense that as we speak, banks were expected to file two types of reports to the Financial Reporting Center. One is the cash transaction report, which requires banks for any cash transaction above equivalent of $10,000, you then have got to file a cash transaction report with the Financial Reporting Center. That's one. And then the other one is in the event a transaction is out of the norm, and based on your relationship with the customer, and a transaction goes through the account that is not normally expected, you're expected to file what you call a suspicious transaction report. The obligation of the financial institution is to file that report with the Financial Reporting Center. The Financial Reporting Center looks at the report and then decides what to do next. It can refer it to the law enforcement authority, it can refer it to the various other regulatory bodies for further follow-up. Now, to help the processing of this, the Financial Reporting Center requires some specific details to be included in that report. So what Central Bank is trying to do is to ensure that the report has got adequate details to help the Financial Reporting Center to be able to pursue the report in the event that it has got to do further analysis. So the clarification the Central Bank gave the previous week was effectively to ensure that financial institutions are guided in terms of the information that they should obtain from the customer before filing the cash transaction report.
Right. And one of those things, I'm sure they introduced a few things. They said, not only do you have to say where the money is going, you have to say why it's leaving, why you're not using the electronic systems, you're not transferring it electronically as opposed to you're doing this manually. If you're depositing, where the money is from, who are the beneficiaries, whether direct and indirect. Do you think banks will be able, is this something that is easily implementable?
Of course, what it does is that it adds a little bit more of responsibility on the bank, but in view of the fact that there is a governing law to which institutions will have to abide by, it just means that they may have to go a little bit further beyond what they have normally been doing in order to satisfy the other regulatory authorities in terms of the fact that they are providing the information required for further follow-up. So it will require a little bit more from the financial institutions. It may require a little bit more of investment in terms of resources to be able to provide that information. It will require a little bit more of resources because that information has got to be retained by the financial institutions for the statutory 7 years. So it puts in a little bit more of responsibility on the financial institution, but it's in line with trying to comply with the existing law.
What does this mean for the credibility of the financial sector? We've seen the central bank, becoming stricter and, trying to enforce its laws more. We saw last year they talked about the thing about trading only 10% of your total assets in the forex market. We've seen them coming in and reinforcing some of these rules. So do you think the rules that they have gazetted and released to the banks. Do you think this will boost the credibility of the banks?
I think if you look at most of them, it's more or less trying to provide clarity. I think when laws are not clear, when they are not clear to the public that is meant to abide by the law, then you have got a loose regulatory framework. Now, in order for the regulator to be able to perform its role, you have got to be very clear in terms of expectations of the public that is meant to abide by the law, and you as a regulator, what you're supposed to be getting from the regulated entities. So what Central Bank has been trying to do of late is try to ensure that there is clear clarity between the institutions and the banking public and itself in terms of the expectations. So like right now, the banking public should know that when the bank is asking for that additional information, it's not that the bank is trying to be, unnecessarily intrusive. It is just that there is a law that has got to be complied by, and therefore the bank has got to do its role in that legal framework.
So do you think this new laws, do you think will now get, into the white as opposed to just being in the grey?
Actually, just a little bit of background. Kenya is not actually ranked as grey. We were there some years back, and in view of the measures we put in place, we were actually removed from the grey list into, would you call it, white list, so that we are now effectively abiding by the requirements as per the Financial Action Task Force globally. Now, having said that, I think having tested the possibility of being put into the grey list, we now have got to be extra vigilant in terms of ensuring that our system is reinforced to the extent that we are in line with the global guidelines that govern financial institutions. The Financial Action Task Force has got 40 recommendations that